So welcome back to my YouTube channel. So in this video, what I'm going to be showing you guys is how to get your draw liquidity and how to be more accurate with it by using the DXY. If you're watching this video and you do ICT or SMC and you trade XXX USD pairs, when I mean XXX USD pairs, I mean Euro USD, GBP USD, AUD USD, and you happen to not use DXY as a correlation to understand your daily bias and draw liquidities, you most likely get faked out by pairs like GU especially and the rest of them, because they are all going to do the same thing, but they're not going to tell you the same story at first. So GU could be giving you reasons to sell, while EU is giving you reasons to buy. AU is giving you reasons to sell too. What happens is that they're going to make you see the market differently, but at the end of the day, they will do the same exact thing. So that's why some people would lose, and you might blame it on the pair, blame it on market condition, but your win rate is going to increase significantly if you use your DXY to find out your draw liquidity every day. So I'm going to talk about what happened throughout last week. Okay, as at the time I'm making this video, today is around 24th June 2024, Monday. So I'm going to do what happened last week, Monday, throughout. I think that's going to be 17th June 2024 till Friday. Show you how I was able to use the DXY to know the draw liquidity with ease, as easy as possible. So now, the first thing is you have to go to US dollar index TVC. I use TVC broker, and this is okay. Let's play it to its Monday price action. Okay, let's play it in Monday price action. So I'm on 15 minutes and I'm using a replay. Okay, that's so that you can understand it better. So what I'm trying to is, okay, we are on Monday right now, and we're gonna play this till 5:15 Nigerian time. I use UTC +1 because the time here. So I come to the chart by 6:30. Okay, I come by 6:30 to see what the market is doing and where we're headed for the day. But I'm gonna leave it here as 5:45. So when I come to the market, I go to DXY first. Okay, now ignore this candle you see right here, because this candle was how the day played out. Okay, ignore it. When you come to the market around that time, the only data you'd have to know what the market is doing is the previous day candle and rest of the candles. Okay, but this is a replay mode. When we come to daily, the candle is already fully formed, so that's not exactly what we need right now. We need the previous candles, right, to understand where the market is going to. So we are bullish. If you check the weekly, watch what happened. Price was bullish right here, broke this high, created new highs, retracing. Where is price retracing to? Okay, so it retraced around liquidity here. I like putting my liquidity lines in blue. Around sell side liquidity here, and is rallying up back to this draw liquidity. So it means overall for the week we're going to be anticipating more bullish candle to the upside, and that's the same high here, looking very attractive. Inside the same place where that liquidity was run on the daily chart, we have an order block here, and price traded into it, traded out, traded deeper to run this liquidity here. It's just liquidity, and then still going higher. We broke these highs, we retrace to fair value gap here, and then we broke the previous high again. So this is the last candle you're going to be seeing on this day. Okay, so where is price going to expand to? Well, when I'm thinking about that, I don't think about candle basis. That's what makes me different from a lot of ICT traders. I look at it on structure basis. Okay, just broke structure to the upside, so we need retracement. Okay, and also we can still be impulsive and keep running to this highs. It's possible, but if we're gonna break down there, we're gonna see the signs on the 4-hour. If we're gonna keep going impulsively, we're gonna see the signs on the 4-hour on the lower time frames. Okay, so I have two bias of candles. Either we expand, start going higher, or we retrace into this. Okay, this area is carrying an order block and an inverted FVG. Okay, so I will not talk about the inverted FVG much. Let's just focus on the order block, because some of you don't know what inverted FVG is. So this is it, right? So now let's go to the 4 hours and see what's going on. Like I said, you see that push has not happened. So what do I do in cases like this on the 4 hours? Okay, I'm going to draw my fib from this low to this high. Okay, my fib is very scanty, it just has 3 levels. This is 0, equilibrium, and 1. Okay, so I'm very focused about the equilibrium, the discount, and the premium. That's what I'm more focused about. Okay, so it's for us to be able to hang fib here, it means price is showing signs of wanting to retrace. So where is the first internal range liquidity we can find here? FVG. Okay, you want to say PDRA, internal range liquidity, or PY, all the same thing. So this is the first one we can find here, FVG. So that's our draw on liquidity for the day. Yes, on DXY, meaning we have to trade lower into that. That's our draw liquidity for the day. We're going to try to trade into that because we're able to hang fib. Price needs to retrace, and there is a magnet here, which is this. So knowing your draw liquidity on DXY, everything is finished. So you go to your 1 hour time frame and try to refine that draw liquidity. When you refine it, it's gonna look better like this. Okay, so your eye is gonna be on these levels to trade towards it. So it means what's gonna be happening on the London Open is maybe some sort of AMD to for price to land there. Very simple. Okay, so what's gonna happen? Okay, so what's gonna happen is we go to EURUSD and look at what's gonna happen there too. So on EURUSD, if you look at the daily chart too, we are bearish, opposite of DXY, headed towards this, and ignore this candle that formed. That's the outcome of the day. Focus on previous candle and all other candles to understand what this market is doing. So we're breaking down bearish, bearish, bearish. So on the 4 hours, this is where we are, and this is where you come to the market in the morning, as you can see. So this, in as much as we are bearish on DXY, therefore definitely is going to be bullish here, since it's opposite of DXY, and there are more reasons as why it's going to be bullish here. So this is an FVG that price mitigated yesterday, and it's as price mitigated yesterday, and there was no reasonable reaction from it. What this tells us is simple. What this tells us is that the market is not ready to fall from this FVG, and whenever these things happen, it's most likely because if you refine this FVG to the 1 hour time frame, you find that there's nothing really serious happening here. So let's take a look at it. Okay, though there was a buy side liquidity here, but price closed above it, which is sign of strength. It's not sign of weakness, meaning price is not trying to drop from it. Look at the strength is to close above it. So literally this whole FVG is expired. That's how I see it. That's how I trade. If an FVG has been mitigated on the 4 hour previous day, for the next day it's expired. I'm not gonna like to use it again because it's most likely gonna work. Every new day, the 4 hour time frame enters a new POI. Okay, so if I'm drawing my fee from here to here, we're in the discount level 1. So when we're in the discount level, buying makes sense, first of all. Second, we have a new supply zone up here. So that's what I'm taking my eyes off this FVG, right? Because it has been used. So here has not been used. So we are gonna most likely trade into it. Okay, we're gonna most likely what trade into it. So how are we gonna trade into it? We're gonna wait for our what confirmation entries on the lower time frame, and we have gotten a confirmation. DXY is pointing down and this is pointing up, so it has made your analysis pretty precise. So where is my draw for the day? My draw is here. So I'll just put a marker like this, make it a red line, so I can be sure that this is where I'm anticipating price to get to. Here on DXY, I'm anticipating price to get here. Okay, very simple. So in as much as DXY has not gotten to its own, I'll literally still be bullish on Euro USD. So now let's go to the 1 hour to refine this POI if there's any need to refine it. So if you look properly at it, you can still refine this POI to this, and yes, you can refine this POI to this, and your draw even goes more higher. So on the 15, I need to refine more. I think it's okay because we have a buy side liquidity inside, so that's enough refinement. Okay, so how we're gonna get into this trade? So I need my AMD. My AMD is okay. My 222 model is okay. Okay, so my AMD is this an Asian range. I need price to go below. Okay, I need price to go below into a POI or something and go higher, but then we're gonna wait till it's 7 a.m. Nigerian time, which is 2 a.m. Eastern time. Okay, which is London Q zone open. So I'm going to wait. What's the time? 4:30, not your time. What's the time? 5:30, not your time. What's the time? 6:45, not your time. Okay, now this is 7 o'clock. Okay, that's the Q zone, London Q zone open. So I know some people would like to buy directly here. If you buy directly here, you most likely be wicked out. Okay, but from this FVG, you most likely be wicked out. So what's the best thing for you to do? The best thing for you to do is wait for the 7 a.m. to open and mitigate somewhere and then join later. So if you check, we swept this liquidity under the Asian range. Okay, so that's enough reason why I'm gonna buy, take this trade, gonna buy, I put my stops below. And if you also took this trade directly from the FVG and you got wicked out, it's part of the game, it happens. Okay, that's why you have to be very careful. It happens. So my TPB, I'll just put my TP above this high. This is London because I know price is going to go higher, but most likely in the New York. I like to take my profits as fast as possible. I'm not gonna hold to this level because the New York will come and do its own manipulation too. So watch how I'm gonna smash at TP. Okay, that was pretty close. Okay, then we came back to entry again and then we smash higher. Okay, so what did you learn from this? First things first, let's see how the New York is gonna play out. We have not hit our draw on liquidity, and in as much as DXY has not hit its own too, we still have our draw liquidity, and that's exactly where we're gonna look to trade towards. So if we wait for the New York and the New York does the same thing, fine. So okay, the New York session is active right now. As you can see, we ran a low, but we are supposed to run a low under London for it to be an AMD, but now it ran a random low here. So what happens is this happens, we wait for a market structure shifts. Let's trade it to model. Okay, this return to FVG and then higher. Okay, so let me show you. So now see, that's 22 model right there. We broke here, you can see that. So how do we get our entry? We move to the 5 minutes to look for an FVG. If there is no FVG on the 15, and you can see there's an FVG here. So that's exactly where you're gonna enter from. When price gets to that FG, you're gonna put your stops down to make sure you're safe, and then you can start targeting that DOL. Literally, that's just how you trade it in the New York. And I think the day is almost over. Okay, not yet. Not yet. It's not over yet. Just that there's low volume. Q zone is over, so you might just as well just take your profits since there was no much volatility. But literally, price is gonna get there. But it did not make it that same day. But I think it got there the next day. Yes. Literally, that red line is your draw on liquidity, and price happened to get there, and that's how to get a draw liquidity. So we'll go over to the next example. Okay, so let's go over to the next example by analyzing what the market will do again on DXY. So let's see. As you can see, DXY got its draw liquidity too. You see that happened, and that's it. So we'll move for the next day. So how do we know our draw liquidity for the next day? First of all, we check the daily charts. What are we expecting price to do? Well, because this previous day candle closed like this, personally, I'm expecting price to get into the other block, which is this, and there are going to be lots of POIs on the 4 hours in that same area. And another one is this. We have this sell side liquidity resting here. We have other block resting here. Okay, all of these are POIs that the market is going to trade to, and I think the market is going to smash these and these, and maybe go down. I don't know, but you don't need to aim far. The next PDRAs or POIs, the next places that are able to magnetize price to come to them. Okay, so let's play it to its Asian session of the next day, so we can know what the 4 hours telling us. Okay, so there we go. This is 5 o'clock. So let's pick what's going on. So if you check, the day just got active, and see price has been able to run inside this POI on the next day first, and this is an order block. Now take a look at this order block properly. Okay, it's inside the big daily area, the big daily zone. Okay, so and price mitigated it today. So does that mean we're going to still trade lower after price has mitigated something as important as this? We'll find out. Now this is how to find out. Now we have mitigated this, so we'll go to the 1 hour and check and refine it if it's actually mitigated something. So it was enter an FVG on the 1 hour. Okay, that makes sense. And then on the 15th, if you check, it enters something like an FVG, but then I don't work with things like this because this FVG price has rebalanced it before. So me still like trading off it, I don't like it. It's not high probability. So this, I don't take it seriously. Okay, so what's going to happen? What am I going to do? So now we are not yet in the discounts. Okay, so I'm never going to buy because price is reacting from here. Neither am I going to sell towards it. I'll say again, we are not, okay, sorry, we are not acting from the discount level. 1, I'm never going to buy from this other block. 2, the other block mitigated 4 hour here, and also it's matched with 1 hour, but it did not match with 15 minutes point of interest. So it means the POI mitigation is not complete. And what does it take for it to be complete? It has to mitigate a 15 minutes area inside that same zone. That's when I can call it complete. So that's going to be a draw on liquidity. So I'm going to make it red line here. I'm going to move the old red line. So my draw liquidity is down. Today is down. So if it's down, what's my draw liquidity for Euro USD? Down too. Okay, you see that? Very easy to understand. Sorry, Euro USD up, not down. Okay, so if my draw liquidity for DXY again is down, But it mitigated here 4 hours and it respected on 1 hour, but did not respect 15 minute version of that same zone. So I would literally trade towards it because we are in premium and the premium is sell. Okay, so trading towards it is fair enough. Okay, remember the rule. Every day on the 4 hour time frame, a pair will be mitigated. Okay, a pair will be mitigated, but then you have to know which price will come for and why you should be selling. Okay, so if this was in a discount, I wouldn't have tried to sell it. If this POI and everything was happening in discount, I won't try to sell it because selling the discount is kind of very risky, and until the appropriate things are actually like in place, it's not going to make sense. So our draw really is down today. So let's pick at Euro USD and see what our draw will be like. So we start from the daily chart. So what's going on the daily charts here? So what's going on the daily chart here? We see our previous candle and the rest of the candle. Now we are retracing into this other block too. Okay, so if we retrace inside, which we have, but there are many POIs in 4 hours that are in this zone that price will most likely come to. And yesterday was a time for this 4 hour supply. If we not refine it, you see how it is full time. So it's another day, and the 4 hours we need to get something else. And another POI inside of this place is gonna be this one. So that's a buy side liquidity. So that's my new draw liquidity. Remember DXY is down, so definitely that validates this analysis that you used on the up. So it gives you more confidence and it makes you know what you're doing. And also, if you have other XSS USD pairs on your watch list, this alone is capable of making you know where price is going to. Okay, because the G might be looking very very funny, but you know that the draw is higher. AU might look very funny, NZD USD might look very funny, but you know that the draw is higher. Gold might look very funny, but you know that the draw is higher. When it's your London Q zone, you want to wait for their bullish AMD and get involved with it. See it as simple as that. So what do you do? Now let's go to the Asian and play. Sorry, let's go to the 15th and play this. So that you can see. So we have a new draw, which is this red line here. And maybe above, but it's the closest POI that we can think of right now. This blue has not been met too, but that was for yesterday. So now this is how my Asian is moving away from me. That's a good sign when it's moving away from me. Now we are going way deeper into the discount. Okay, discount price is moving deeper away from the opening price for the day. So okay, so let's our draw higher. So I'll just wait for I'm waiting for my AMD literally, Chelsea. I'm waiting for my AMD to happen. See, we are going lower, and that's how it is. I'm waiting for my AMD to happen, and we are still in Asian. So what is now? It's 7 now. Okay, now it's 7 o'clock. So once it's 7 o'clock, I need my AMD. So if price runs this low, we can go higher from there. Okay, if price runs that low, we can go higher from there. So okay, it looks good. So let's see, it went higher. Okay, do nothing because our bias is higher. Okay, now it's coming lower too. Now this happens, this sweep happens. Now this is the best sweep to literally buy from, because even on the 1 hour is a rejection, but then let's see that will work out. So our entry there, put our stops there, and then we are aiming for Asian high, and here we go. So that ended as a loss, which happens. Does that mean your draw has changed? No, we still have our draw to be higher. In London, it didn't just play out, so go away for what? New York, or even before New York, if we have any reasonable sweep again. Let's see. So this is buy side, and then price did not run any buy side during the London until New York. So this 12 o'clock Nigerian time is 7 a.m. Eastern time that we need to be looking for setups of currencies according to ICT. So here, okay, now this is another sweep. Okay, that candle give another sweep. See, so we're gonna enter on that, put our stops below because we have another one here. So that in case price wants to run them both. So we have this 1, 2, and then what is our TP going to be? Okay, up. I'll just put that Asian high because I know for sure. See, that was very close. Okay, there was a news coming. Now you see what did you see what price just did? Price we entered on this week. Okay, this rejection here, which made sense. But then because there was a news, price was doing seek and destroy because we want to buy by the news. So what did this mean here? When there's a high impact news, sometimes you want to trade during the New York so that you can catch the expansion to the DOL. Because if your London expands to the DOL before the news, the draw liquidity for the day, before the news, what happens? When the news happens, where's price going to go next? These DOLs have areas that booked that price is going to what? Go from. Go to for every given day. They are booked. So if you literally just trade in London, you might get a win, but it might not go far, or you might get stopped out. So the news is the best time to trade. But Euro USD was very tricky because every normal person would have wanted to put their stop loss here. But now, if you check below, you see a rejection block around here. I know some of you are not used to rejection blocks, but it's very important. You see this low, you see this rejection blocks. New news is coming, so you widen your stop loss because you know news is coming. So you have to check your economic calendar. Once you know news is coming, you put that stop loss, you widen it enough under everything that price is gonna do. And if you look at this rejection block, if you find it to 5 minutes, you see that it's something very important. You see that it's an order block here of 5 minutes. You see that? So it's an important area. So learn this now because you know news is coming, and literally that's gonna do some manipulation, real good manipulation before it literally goes in your favor. So and that's how the draw liquidity was smashed, that red line you see here. So in New York, I tell people put your TP at the draw liquidity because price will most likely get there if there is news. Because that's what trading price to go higher. Okay, so draw liquidity smashed for the day. Again, we got it where via DXY, and that was down for this, and DXY literally did it. And if you check on 15, DXY was less manipulative towards that. Let's see. Okay, I think it was the same thing because in London, DXY tried to run this, and it's gonna allow people to sell, but it did not sell with that. And then I think it was less manipulative because in New York it just came straight up to get into the supply, and then there goes the drop. While EU has tried to do a lot of rubbish, and there goes the drop straight to the DOL, like a 7 hour. So check other XS USD. Now let me tell you something. One thing you should know is when EU looks more manipulative or have more PDRs that price might buy from, you can also check other XXS USD pairs like GU, AU, or gold or something. Now, if you're watching this video based on my course on the Google Drive, that's not for you, okay? Because this video is going to be uploaded on YouTube too. So yeah, for the YouTube viewers doing this, if you have XXX USD pairs and the rest, you can as well enter on them. Every pair would not do the same. Okay, when it comes to entry, they all have the draw liquidity the same, but their entries is going to differ. Some are going to be clearer, easy to understand, less manipulative. Yeah, so let's see the next day on DXY. How we can get our draw liquidity again. Now, on Wednesday, so how we can get our draw liquidity. So Let's remove these red lines. I won't get confused. Remove everything. That chart to be clean. Okay, so this joint liquidity has been hit. So what are we expecting the next day? Well, if we have run the sell side and we're in the daily order block, if it's strong enough, it's going to push price higher. If it's not strong enough, price is going to still go deeper to find other POIs that are in this 4-hour range. Okay, example, there's an FVG resting below. Price is going to want to go there. This is in discount. If this one does not take price higher, these sales are liquidating the next. That's how we do it. Okay, so we run here. Is this capable of taking price up? Because when price sweeps a low, it's literally a low in 1 hour. It's literally a low too in the 15. So it means it was mitigated properly across other lower time frames. It has capability of taking price higher. You can't force it. So what's going to happen is, since it was perfectly mitigated other time frames, what I'm going to do is I'm not going to trade against it because I don't know if it's going to fail until I see signs. And I'm not going to trade from it because it's in the premium. I'm not going to buy from it because it's in the premium. I'm not going to trade against it because it mitigated all these time frames properly. 1 hour, 15, 5 minutes. It's a low, and a low is a low on other time frames. It's going to be easy to understand that, right? So how are we going to do? So we'll just play it the next day and see how whether price is reacting properly. But it looks like it wants to go back and fill it. That's my policy. Even if you want to go back and fill it, you don't believe, because until it has failed. So on this day kind of days, you just stay out until it has failed. So it's 6. So how does it look on the 4 hours? Do you see that it's looking as if it wants to buy? So imagine you guys start looking for AMD to fail this. For me, it does not make sense. So until it fails, this way it is. They tried that it will fail, but it has not failed. Until it fails, then I know that okay, you're going to be getting for your next. So it did not fail. You see, it has not failed yet. So we're in the next day. So let's go and look at the daily again. So on that day, no trade. Now look at the daily. It's looking like we want to go lower again, but we have not run this low. So the possibility of running higher because of this swept liquidity is also very high. Okay, so you can't tell. So even as today, we can't tell if this is going to lead to bullishness. But one thing you should know is that when price got into this big block, it's actually a daily. It's actually a daily level. It's going to be red. No, sorry, not yet. Not yet a daily level, right? Or is it? Yes, it's a daily level. Make it right. Can you see that? It's a daily level. And then price literally got into a point of interest. What happens is that once price basically a POI and something like this happens, we have started creating new swings. New 4-hour swings. So we're going to trade in line with those swings. That's what I know. And that's how it works. So 15 minutes charts. Let's play it with them. See, I'm spending much time on DXY more. Why? Why am I spending more time on DXY? It's because all the XSS USD will give you different information, but they'll play out the same at the end of the day. So who do you trust the most? The DXY is the index, US dollar index. So it's going to give you the most accurate information about how USD is performing. That's the truth. And if it gives you the accurate information about how USD is performing, I think it's the right one you need to check out and spend time on, so you can know the rest where they're headed to. So it's at 6 o'clock. Let's see what price did. So like I said, I'm not going to buy from that, then I'm not going to sell from that, but then I'm regarding this as a high because you're coming from a POI. Okay, you're coming from a POI investigation. So every new high broken is a new trend on the 4 hours, a new trend on the 4 hours. So all I can see is price breaking here. So it means we are in a new trend. So my GL now is going to be a bit different, because I'm going to be aiming for price to retrace back to a POI now in this range between here and here, or between here and here, okay? Because that's the mitigation rate I. So between here and here, I want to see where price is going to trace to. It's going to run this low. I'm not going to say it's going to enter another block yet, because for me to trade other blocks, price must break above and close above previous high. So if it doesn't, I don't trade off other blocks, maybe a sweep or so. Okay, so now we have other blocks. We have a sweep here. That's going to be the blue line. So let's wait for now. This morning, based on what I see, my draw is lower. This blue line, literally, that's my draw. Okay, that's my draw on liquidity. So what's time right now? This is 7. Okay, this is 7. Okay. So what did you notice? Around 7, price closed above here, gets with body. Now all of these signs influences my draw on liquidity. Yes, it does. How does it influence it? Because if it closes here with a week, I'll be sure that next draw is down, or this, not even down. Next draw will be this, because once it's a week, I don't regard this. But the 15 is not, it closed with body. To me, based on how I trade, that's a sign that price will go higher. Okay, that's a sign that price will go higher. So instead of me looking to do this, I'm going to look to go higher to this next draw, because that's the next draw we see higher. Okay, and you'll be like, well, the 4 hours is price is mitigating on every on the 4 hours. Yes, I can see that, but we are not bearish anymore. So I'm not going to rest. I'm not going to be working with bearish PDRs. We have flipped bullish on when we broke past here. Okay, and I know it did not close with. Okay, it's also closed with body here too. Okay, that validate my point. You see, that validate my point. So we have bullish side of going higher. So my draw is now higher, not here anymore, or other block. No, it's higher, because if it was going to be other block or so, 15 minutes, we're going to do a sharp sweep around 7. It's going to be a sweep for price to go lower. But then, and somebody who said, okay, let's assume, as we normally do, okay, we come to the chart by 6:30. If it's by 6:30 I came, where will be my draw? Where will I expecting price to go? Remember, we have not been able to flip here. So I'll still be using yesterday's bias, which I said I'm never gonna sell against the mitigated POI. Never going to do that, because it's mitigated properly, and I'm never going to buy from it too. I mean, mitigated POI like this. I'm never gonna buy from it too. I'm never gonna buy from it too, because price is not in discount in this big swing. Okay, USD. Remember, our DXY, we are projecting higher. So this was yesterday's data. So let's play, or let's look at the daily first before we play. So in as much as price has entered inside this other block, we're supposed to look expecting price to go lower, but then it just entered. So it means price has to mitigate a particular PDRA on the 4 hours around that same zone, because this zone did not hold. But then price ran this high, and not just ran the high, made it into the premium of this big swing. It made it above it. So it's a very good sign that price was to drop. And if we peep towards the 4-hour chart, you find out that, okay, let me play it till we get there. Okay, fine. If you peep towards the 4-hour chart and 1-hour chart, you find out that there's an FG there as price went into that point. So for the 4 hours, it was a sweep. For the 1 hour, it was FG rebalancing. For the 15 minutes, what was that? That was an order block around there. You should see it. Order block FG was around there. So it was a good this thing mitigation that happened on this day as we bought and price got there. Maybe on New York, okay, this is the case. This during the New York after the news. That's when that mitigation started happening, which made sense. If we were selling from that point, it made a lot of sense. But now the thing is, we are going to be looking out for tomorrow's price action. So let's play tomorrow's price action. Let's see tomorrow's price action. Okay, so let's wait till 6. Okay, so what are we going to be expecting? Now, see what we're going to be expecting. I'm expecting price to go higher for what? For DXY. So that means that will be lower prices for what? That will be lower prices for Euro USD, literally. Lower prices for Euro USD, higher prices for DXY. DOL for DXY up, DOL for Euro USD down. Because of this, we have mitigated, and the fact that it's even entered premium side gives me enough confidence as to why I'm going to start looking for sales. And you should understand that anything from here, we are still having new set of 4-hour structures because of this mitigation. So after mitigating here, which happened yesterday, so we're going to start having things like this from now, and it's going to become a new 4-hour trend. For those of you watching for the first time, this is what I mean. For example, if the daily structure enters an OB, okay, daily structure, daily high structure enters an daily order block, any new highs and lows that come from this will be what? 4-hour structures. Okay, so that's what's happening here. This whole block, you see this big place, the daily order block. We're just waiting for price to align with other POIs inside that daily order block. So any movement from there is going to lead to new 4-hour highs and lows form as we keep going lower. Okay, so first things first, our draw is lower. If our draw is lower, then this is where I'm aiming at. If I'm aiming at that place in DXY, I'm aiming at this point. Look at it. DXY, we're aiming higher as DOL. I'm aiming lower as draw liquidity. I'm moving the other red lines. I don't have too many red lines in the chart. Or maybe I'll make it blue so I can be easy to distinguish since we don't have much blue lines. So what do? We wait for price to literally give us a go ahead for us to have reasons to sell. Okay, so our AMD is very important for the sell. So has AMD happened? Now look at it. Price right here is very high, most likely, but when it's above Asian high, we'll enter after the run. But when it's above random highs inside the Asian range, we use the 2022 model. Okay, add a market structure shift here. See it's break of structure here. On the 5 minutes, we have an FVG around here. So you enter, you put your stops above, and then target this low. What low are you going to target? I'm going to target this low here. This one. Why that one? Like I said, if you're taking profits in Asian session and in London session, the Asian low, but we are called lower than the Asian low. So this is the closest low under the Asian. Okay, and as you can see, price got really close, but did it smash? Let's see if it did. That was very close, but it did not smash. It will be on break even. Let's see, and I think that will be a break even trade. Okay, that will be a break even trade. So we'll come back in New York and see how we can cash out from the same trade idea. Our draw is still lower. Okay, so 10:15 a.m. You can't enter the second trade. That's our closing time. Okay, our closing time, that's over. So we cannot you can enter second trade by that time. We'll just wait for New York. Okay, after your first trade hits break even, you wait for New York because no time again. So now this is New York. This is not New York time yet. So let's wait for New York time. So this is New York time 12. So is there any PD array we're gonna work with? So price entered here before 12. So I'm looking for any PD array we can work with to go lower. So let's wait if we're gonna find anyone. Okay, not seen any yet. Still waiting. I think we might not have any trade with New York. Price just consolidated. Today was just a break even day. So let's take a look at the next day. What we are going to be expecting. The DXY make it above. You see, DXY made it higher. Even if we didn't get to draw liquidity, it went higher, but EU didn't just go lower. Maybe if you check GU or other XXX USD pairs, you find that it went lower. It happens, but that didn't happen for DXY. Okay, that didn't happen. See, DXY hit draw liquidity straight up. That was the next point we're headed to. And if you see the 15 minutes, it must have given entry maybe. In London, did it give entry? It did not run any London or any Asian, it just kept rallying up, rallying up. Only in New York, did it give any entry? Just kept rallying up, rallying up. Okay, it ran here during the New York. I won't regard this as a low, literally. I won't, because this is a low, this is not a low. Just a candlestick week. So the DXY had no entries, but it met draw on liquidity. It met draw on liquidity. So I won't go off time. I don't want to make this video too long. But what I'm going to do right now is I won't bother about the entries. I'll just show you the draw liquidities and how price is going to act. So looking forward to the next day. Let's look at the daily. Now, means price is respecting here very well. Where is the next target? It's going to be here, obviously. That's going to be the next target. We have entered other block. This is higher. The next target. Okay. So that's where we are going. So that's where we are headed to. So the XY very bullish. We are going up, up, up. Okay. We're going up, 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 and we just broke it hard. And whenever you see the market impulsive like this, okay, let's see. Let's see how the next day is going to form on the 4 hours, so we'll know how we're going to see the market. Let's see the next day. So these are the next day looks. The next day created a fair value gap here, and that's not even up to 50% of this place. Okay, so you'll be like, is the draw not supposed to be lower? Truth is that yes, the draw is supposed to be lower, but when price has entered a POI, even if it's in premium, the only thing is that you don't buy from it. You don't go and start looking for buys. But if it's mitigated properly across lower time frame, then you can push price up. But then you don't go looking for buys because it's in a premium level. It can fail. No probability. If you check 4 hours, you find out that same FVG has been mitigated on 1 hour before. Okay, and this is now more like a rejection block here, which is also a POI. If you check 15, this place has been mitigated before as an order block. Okay. And if you check 15 minutes, this is another order block here and FG. So everything is aligning literally. So price can run up from here. Okay, price can run up from here. So my draw on for US dollar is going to be higher, not lower. But am I going to be caught buying there? It might just give you some problems, some big problems. But yes, the draw is higher in this case. So if you look at daily on Euro USD, you find out that the next draw is supposed to be here. Next draw is supposed to be here because we have mitigated something very important on the 4 hours inside here. Okay, though this day Wednesday was as price did not drop as DXY bought. So, but this is the important thing we mitigated. So I'm still looking for price to come here. This is still my draw that has not been met. Okay, that has not been met. So if you play this, where's the draw gonna be? DXY is up, Euro USD is just down, like literally just down. Price has to go down because DXY is gonna go up. Now if you see, exactly what I'm telling you, because DXY is gonna pump up because of where the draw is now. Like this is why you look at DXY, because Euro USD is now very confusing. You'll be like, how did you know it's gonna go down? I knew it's gonna go down because I analyzed DXY. DXY is gonna be less confusing most of the time because it's an index. Euro USD is not gonna be less confusing every time, and this is why people lose, because people will just keep saying, okay, this place price reacted last time and price is not doing anything. Let me see, this is gonna be a buy. Literally, no, because DXY is pumping up. It's gonna drop. Literally, okay. It's gonna drop, and it's gonna be the draw liquidity. This even it's not supposed to be draw is supposed to be here, but I don't know why mine is far, but it's still the same thing. Draw is lower. And how would you have cut that draw on liquidity? Let's see if there'll be any sort of entry that you would have used to catch that. See, price was just aggressively selling off after the Asian is London. Price kept selling off aggressively. No retracement, no AMD, no 2022 model entry, just aggressively going down. So while watching this, you know, your draw is lower. So at some point, price tried retracing literally. Let's see when it did, whether we still get an entry. Okay, when he did this, price tried retracing. Okay, now that retracement, if you check on 15 minutes, that's a retracement to give entries, but I don't know if it did. I don't know if it did. So this is 12. Now I think there was no serious entry. No significant high was run with this sweep. The price just got there. It was very bearish. Very bearish. And that was it. That was it. Very straightforward. The draw is literally down. The price kept going lower and lower and lower. Okay, so that was enough for this day, I think. So let's look at the next day. Let's look at the daily first. Now it's obvious that price is coming lower to that red line. That's how you know your draw. It's obvious that price is coming on the daily. It's obvious that price is coming there. But Friday is a very tricky day. So why is it tricky on Friday? On DXY, what's happening on Friday? When you came in the morning time, when you come in the morning, you find out that price was at an FVG. You see this place is an FVG. So let me take it back to, let's say, around 6 or something. Price is already in the FVG as at that time. Okay, now when price entered that FVG, the first black candle. Now let's pay attention to what it did first. What's going on here? There's an FVG here before that was indicated yesterday, but that's not the case. The case is the rejection block here. Price is inside, which means 1 hour supports it. 15 minutes, there's another block here, and price is inside. So it means the 15 minutes also supports this area. It means the high, you know, is a good zone. So where is now our draw liquidity? It can never ever be down in this case. But everything here is perfect. But if I'm going to trade DXY like directly, will I buy at premium? No, I won't. I will not do that. But where is my draw liquidity gonna be? It's gonna be up. It's gonna be down until I see this whole area start failing. Then I can ask, okay, is the average is down? That's draw liquidity. But as long as it's respecting everything here over 1 hour and 15 minutes, trust me, my draw liquidity is up. So now, since my draw liquidity is up, like this high and this one, if it breaks this high and it's still impulsive, then it's getting towards this one. Now, what you should understand is this: if I go to other XXX USD pairs, And let's say because EU is directly opposite of DXY, so EU will be an inverse of this. It's going to be bearish, and EU is not going to be in the correct premium, meaning EU will be like this. EU will most likely be like this, whereby it's very far from the premium. And will I involve myself in sales? No, because here's discount. So in such case, that's why you see professional traders go look for another XXX USD pair like GBPUSD. So let's pick GBPUSD. What's GBPUSD doing? GBPUSD broke structure and we are impulsively bearish. It has not confirmed that there's any low. As you can see, you can't even hang a fib because it's just impulse. And when the price is impulsive like this, what do? We literally look for bears. Okay, when price is impossible like this, what do? We look for bears. So when we play let's see how the bear is going to work out. Let's see. Remember, DXY is bullish, so we are automatically bearish on every XXX pair. And I'll tell you why I did not choose Euro USD. But let's take this on GBP USD first. Now you see, this is my I took this trade on Friday. So you would see how after the Asian range, price flashed to this FVG and started dropping. Now at 7 a.m. Eastern time, when DXY is about peaking to go to the draw on liquidities, you should be on XSS USD pairs like GBP USD waiting to sell. Now you say, oh, but you did not wait till price retrace back to premium. That is because the rule for me, how I trade, there's this rule: if we break structure and price is impulsively going down, we have two options. During the New York London kill zone or New York kill zone, but as long as that time window, we have two options. If you come and meet it impulsively, you have two options. First option, price run Asian high, do an AMD, and then drop. Okay, we are not going to wait till it comes to anywhere. We're never going to hang fib. It's not our business. Okay, because it's impulsively going down, and everything you see here is 15 minutes happening. On the 4 hours, it's still going to show straight and impulsively going down. Okay, second option is if we run a particular low, a very old low at the left hand side, and we run it and close above it and just leave weak. This can be a bullish call. Okay, it can be a bullish signal for us to buy back up to any draw liquidity. Now you can only do this when the DXY shows that its draw liquidity is bearish. Then you can do this kind of thing with XXX USD pairs, because this is the model, right? I call it my 4-hour reversal model. Okay, so this cannot be a reversal, but DXY is already pointing up, so this is going to be the impulsive sales that I look for. And based on AMG, this is 7 o'clock and price did not run this, it closed above, so this is an old POI, and this is where you enter pure stops here and take profits under Asian low, and that's how it just worked out. Why didn't I trade Euro USD? So let's pick why I did not take it on Euro USD like that. So let's go Euro USD, this one. So let's see why it's not wise to take it that way. Okay, even if it played out with AMG also, but this is why it's not wise. Now this is why it's not wise to take it that way. Remember, EU is directly opposite of DXY. So this is the day we're talking about. So this is a high and this is a low. I would never want to sell. I know that yes, DXY has draw liquidity higher and then EU draw liquidity is here. I know, but this is discount. I would never want to place a sell order and put stop loss in this discount, because even during that AM, the price can fake you out just to enter here and run something, then before they will flash down. You don't want to risk that. Okay, so as long as in my model, on a normal, if you don't look at DXY, this will be your draw liquidity of this day. Then you will even be looking to buy to this place. That's why I say looking at DXY is very important. If you don't look at DXY, this is going to be your draw on liquidity of Friday on EU premium place. And you when price is coming to this draw, you keep buying and keep losing, keep buying and keep losing. So that's why you see your DXY is so important. So with DXY, you know that the draw liquidity is down, and no matter what it's doing here, it's not your business. You just want to look for your AMD, you get, and sell. But then you don't have to be stupid. When you look at your 4-hour time frame, you have to know how to follow the model rightly. I know there's a rejection block here, I know, but when you must sell, at least your order must be across, or even if your stop loss must be across this equilibrium line, because of some kind of weak sell just happened weirdly. This is the draw, and that's the draw. So since EU does not fit with it properly, you use a pair like GU that fits with the model properly, and that's why I did not use Euro USD on this day to make this illustration. See you guys next video.